Buying and selling a place at the exact same time can seem so complicated, but let's make it easy here for you today. Hi, welcome back to another Coffee with Coleman. We love to discuss Washington, D.C., business, real estate, all that good stuff. My name is John Coleman, and I'm a real estate agent here in Washington, D.C. with the Jason Martin Group. Quick favor, if this is something you've been thinking about, go ahead and hit that like button because it helps me know that the kind of information that I'm putting out here is actually resonating with people, and that's my goal. Make sure that these help you do what you need to do to accomplish your real estate needs and goals. So this is something we're constantly in conversations with folks about, and it's hard to make sense of sometimes. Remember that buying process, and it wasn't the most simplistic thing in the world, but now you have a layer where you have to sell a place too. And bonus, if you stay tuned till the end, I'm gonna tell you my own personal story of when I sold my last place and bought my current place, and I'll tell you a little bit about the tactics that I used to make it happen as simply as possible. In general though, these are the basic things you need to know. First is, are you gonna liquidate your current asset? Meaning sell your house. Or are you gonna hold on to it and keep it as an investment and maybe rent it out? You have the option to do that. And if you already have the money saved up to purchase the new place and you don't need to sell this one, well, maybe that's the plan. And if that's the case, it doesn't need to be too much different than when you went about it the first time. It's just by the time you move out, you gotta find a renter to take over your current spot. Not too tough, but still something else to think about that wasn't there last time. The next thing you need to know about is what's your take home? Make sure you have an agent give you a sense of what they think your current house is worth and what it's gonna sell for. And then from there, they'll be able to take out and give you what we call a net sheet. A net sheet is gonna take what you're gonna sell the place for, subtract out what you owe on it, and then work in all those fees, because there's always pesky fees with real estate, and that way you can get a sense of what kind of money's actually gonna be hitting your bank account, because that might factor into how much of a house you're gonna purchase on the next time around. All right, buckle up your bootstraps. Now we're gonna pick your poison. This is the big question that a lot of people grapple with most. And it's, if you're not going to keep your old house, then are you gonna look at selling and then buying, or buying and then selling? And while they're both the same kind of words, just in different orders, they operate much differently. Buying and then selling means you have the money for the down payment socked away somewhere with a loan program or in your account that's gonna make the jump from one place to another much easier. The bonus about doing it this way is you don't need to worry about being homeless, which is great. You're not going to sell your place until you have a new one in line. And that continuity can mean a lot to people. On the downside, this is the way that it can actually cost you a little bit more, because those loan programs can cost a little bit more. Let's say you do find a place and then you make the move and then you put your house on the market. You have to be ready that it might not sell right away. The market might be fire right now. It might be moving, but that doesn't mean that in 3 weeks it's going to be the exact same case. And so as a consumer and as a person that's going through with this, you need to be ready to carry 2 mortgages for a period of time in case your place doesn't move as quickly as you wanted it to at the price you listed it. All right, reverse. If you want to sell and then buy, the bonus is you don't have to carry 2 properties at the same time. That's a lot of weight off your shoulders. The money will be liquid once you sell, and then you can be all comfortable knowing that when you're going off after the next place, you can make a compelling offer and you don't have to worry about that. The nervousness of this option kicks in when you sell your place and then all of a sudden you can't find the next one. Well, this means you might need to find some temporary housing, which, let's be honest, means you gotta move twice. And if there's one thing people can all agree on, is that moving is the absolute worst. And we hate putting you through that twice, but it's a real possibility, and you might need to find a short or a long-term rental as you're figuring out your next spot, because you don't want to feel rushed. You don't want to make a decision based on the fact that you couldn't find anything better. So you have to be ready to be patient. All right, so getting the funds before you sell. There are a few different options you can explore. First of which is a bridge loan. A bridge loan is a loan that covers you from one house to the next, and it sounds perfect. Although it can be a little costly, and it's not exactly a slam dunk. if you can't actually cover both mortgages and keep your debt to income ratio right, the lender might not even work with you on that. So it's important that we connect to walk you through what options you might have available and what pluses and minuses might happen for you as you're figuring this out. The second option is a recast. This means you take a whole chunk of money after you purchase the place and throw it on the principal, and that way you can try to bring down the amount owed and they'll readjust your loan so it'll mimic like you did put a big payment down. Now there's pieces of whether you locked in a really good interest rate, can you change that? And there's some pieces that are moving there, but it is another option. Third is a HELOC, or a home equity line of credit. This is what I did, and I'll get to my story in a little bit, but essentially you take a line of credit on your current house and you can use that money to put as a down payment on the next one. Now the bonus is that money's pretty easy to get. It just takes a little time to open it up. The downside is there's some carrying costs with it, and there's, you gotta sell your place or else you're gonna be paying an interest-only loan for a while. We'll get to that in a little bit more detail shortly. The second thing you need to know about is a rent back. So a rent back is essentially saying when you sell first, there is an option to negotiate in your contract that says, I would like to reside in the home after settlement for a period of time. Due to lender regulations, it's usually tops about 60 days. If you have a cash offer, they might let you stay longer. However, with a rent back, it's not always a given. You might run into somebody that's like, hey, I'm gonna pay you a whole heap and pile of cash, and if I give you this cash, I'm gonna need you to move out in settlement day. And if you're looking to sell and you have a good offer, you have to be ready for that option. So while getting a rent back would be nice, it's not guaranteed until it's all signed on the dotted line and everyone can come to terms with it. So you still have to have a backup option. All right, I promised you my story, so I will walk you through what we thought about when this happened. So back in the day, and this was just 2 years ago, so it really wasn't that long ago, but you get my drift. We adopted a puppy. Her name is Lola. You might have seen her in some of my other videos. She's amazing. Our space started feeling a little bit tighter, and there was a house that popped up in a neighborhood like a block and a half away that's on a block that we've always really adored. And so we wanted to make a move. So we had done some updates to our place and we built up some nice equity between what we put down and then additionally what we had done to the house itself. So one thing we always thought about was actually having a line of credit open or a HELOC. And what this essentially is someone's going to lend you an amount of money that is worth the amount of equity that you have in the house. Now, some banks only lend you up to 80% of your equity. We found a place that did up to 100%, which for us mattered, so we went ahead and we applied for them. Now, it took a good 60 to 90 days to open up that actual line of credit, and we had a lot of back and forth, especially since the first appraiser really missed the mark on what we felt like our house was worth. So we had to go back to the drawing board, provide comps, have them go back and go through what it was. And then based on what they saw there, they adjusted our line of credit up to what we felt like it was actually worth. But once it was done, this line of credit was always just kind of there in case of an emergency fix, if we needed to replace a roof, or if we just wanted some liquidity. Or you want to get crazy and go throw some black over at MGM. I'm kidding, don't do that. But since we had the line of credit open, when this house was popping up, it gave us the option to go after it. And that is exactly what we did. And how hard is this money to access? You literally write yourself a check from your HELOC account to your bank account, and then a couple days later, it magically shows up. And it's kind of shocking how well it works. Now, here's the thing to know, is the interest on these loans are high. And then when you draw on that money, you have to do an interest-only payment each month. It doesn't go towards paying down a principal or anything like that. And for this specific loan, I think we pulled out $100,000 to put as our new down payment. That was about $500 per month on just the interest. That's without paying down any bit of that loan. So it's not something that we wanted to do for a very long time. And since it's not something we want to do for a very long time, we went ahead and put our house on the market. And we made that happen pretty quick. I think it was within 3 weeks. We power washed and cleaned up our backyard, repainted, got everything going. We moved stuff into storage and got our place on the market within 3 weeks. Our goal there was then to list our house at a price where we felt pretty comfortable that one, it would sell at quickly, and two, a number we would be happy with if we got it. So we put it on there knowing that there was a potential that it could go higher, but we were just hoping for one really good offer. And we got pleasantly surprised. We ended up with a handful of offers, which was awesome because not only did we get an offer that was good in price, they had a lack of contingencies too, which really impacted our ability to feel comfortable making the move, moving our stuff, and making things happen. The other nice thing is we ended up with that rent back that we talked about, meaning they let us stay in the house for another 2 to 3 weeks while we moved into our new home, which made the moving process that much easier. So we were just really happy with our strategy to allow us to move it quickly, but also comfortably. And it's something to take into consideration when you're selling your place. Maybe it's worth some of that convenience of trying to get the best offer rather than really pushing the limits on what the property is worth. But everyone's situation is different, which is why it's important that we sit down and talk through it if that's what's important to you. And honestly, I do this for a living, and it was still that stressful. So I can only imagine what all of you guys are going through with it when you don't really know 100% it's moving on, which is why you need to have someone with experience. There's a lot of pieces moving here, from finding the next place, getting it for the right price, putting in the offer and structuring a way to protect you, but also getting your place ready for sale and moving that quickly too. So if this is something that you're thinking about, you really need to reach out to us so we can help make that happen. Whether it's gonna happen now or whether it's gonna happen from a year to now, it's important to start getting the plan ready, because what are you gonna improve? What's gonna give you the highest cost and return on investment? And we can help start walking down that path of what everything is gonna look like. And if the house that pops up on your perfect block comes around, you want to be ready for it. You don't want to see it pop up online and then like it and then figure out that you don't have the best option for it, or the only option you have for it isn't going to actually make you feel all that comfortable. So working that out on the forefront is going to be super important. All right, so that's my story. And I hope you learned a lot today about what it's like to own a house and then move to a new house. It can be a little bit daunting, but surrounding yourself with the right professionals can make it super easy. And we want to make sure that it goes through as easy as possible. So if you have any questions, go ahead and reach out. We certainly appreciate you, and we want to make sure that we can help you as much as possible. All of my information is below, and we would love to be working with you as much as we can. All right, well, that's it. So thanks for stopping by another Coffee with Coleman. Peace.